Good morning, YouTube. Murphlow's FX back with the camera. Had it off last week, just trying it out. This week I got it on. Maybe next week I'll take it off again. So we got the dollar here. And once again, we are in, there we are, 50% of the range, like exactly 50% of the range. So it really is kind of a toss-up whether it can go higher or lower. My gut says lower. Maybe not for this low per se, but maybe in this area here. I don't have a strong enough bias right now to take a trade. Really, regardless of what the news does today, I mean, if price shoots up into this area and I look for, normally a sell down there, but today it's really just let's see what price does today. That'll help us for the rest of the week. So we'll do this. Now my only thing about these equal highs and equal lows, this low dropped below that low by 1 pip, and this low is lower than this high. This high is lower than this high. So in theory, since these are actually equal and they're actual stops, price would go up there and tag those, but we're so close to these pretty much equal lows with this fair value gap. We've got OTE down here. We have this area I'd still like to see filled in a little more efficiently, especially right there. So if I had to trade today, I would plan on the dollar dropping lower, but I'm not. So we'll see if that comes to fruition. Well, let's do this. The pound opened up, right? So this is Sunday's open. We had a 83 pip gap. So we came up lower high than that, dropped down, tagged this area, came up, bearish order block, drop lower, continue sell. If the dollar is going to go lower, then this should go higher. We have this filled in really nice. We have no imbalances down here. So since the dollar seems like it's going to go lower, I would expect this area to not be broken. I definitely don't want to see it go below this low. If it goes below this low, that could be a break in longer term market structure to continue lower. The reason why I'm looking at this low as something that's pretty significant instead of, like, let's say this low, this swing low, or this swing low. This swing low is right before we took out these highs, so it's more significant than these. So when news hits, I will be looking to see if this area here holds to potentially take out this pretty obvious retail trend line, however you want to justify. Some people justify the trend line like this. Others will do it like that. But regardless, it's showing that this is bearish. Now the euro. So the euro did come up and fill in this fair value gap, but we didn't really have a significant price drop and then kind of a come back up and retest. It kind of dropped down into an old area of buying into another fair value gap and came back up into the range. Again, if the dollar is going to be bearish, I would expect the euro to be bullish. So we came down into this fair value gap and filled it in. We've got no other inefficiencies inefficiencies down here in price where price would want to come down. We do have this area right here, bullish order block, where if it does come down, I would not want to see it break through this square. I do have a feeling though, if news drops, it's going to be heavy going higher. So we got this area in here, and then we have the start of a fair value gap there. So for today, if I was going to be buying, those would be my targets. Well, obviously this high too. First target, second, third. Now the beast. So I've actually been pretty spot on with the beast. You know, I've been wanting to see it go lower, and it consistently just keeps retracing, going lower. See, the trick with weekend open gaps. Now, as Michael or ICT says, this is a true gap, right? It's a weekend gap. So it's not like, you know, a gap before this candle came up where that's a fair value gap. This is a gap where there's been no price. And if you go back and you look at all the gaps that open up on weekends, sometimes they go 50%, retrace for the week, and then eventually come back up. Sometimes they come up to a body, reverse. Other times they'll come right up, because this was the close, right? So if price would need to come up to here to fully close in that gap. So I'm basically saying, because I'm still sticking with my bias that the beast is going to be bearish. So at any point from here, I'm bearish on this pair still. So if I'm bearish on this pair, and the dollar's going to go lower, or I think the dollar's going to go lower, and we were going to buy any one of these pairs, which pair would we want to buy? We would want to buy the pound. So if I think that we're going to reverse in here when news hits, I'm thinking that the pound is going to have a higher jump than the euro. So that's pretty much what I have for my analysis. We got news in 3 minutes. So we'll look at gold in the meantime. Gold's been moving off that Sunday open, 250 pips. It's pretty nice. So again, if the dollar's going to go higher, we should see a nice bounce in here in gold. Now, in reality, if you're buying any kind of order blocks, you want to see the body, the open or the close, depending if it's a bullish or bearish order block. You don't want to see price really go past that, but price is allowed to go to the mean threshold, or 50% of the body, which is about right there. So for gold here, even though, you know, gold took out these highs to keep going lower, I wouldn't personally trade gold right now, because I do think that gold is bearish. You know, in the longer term, you know, I do see these lows getting tagged at some point, but that doesn't mean, and I mean, look at that, the mean threshold of the box lands on the top of this bullish order block, so that could cause a retracement. Problem with gold is, let's say you get in on a slight retracement, you sell and price bounces. These bounces are like hundreds of pips. It's not like a normal currency. That's why with gold you gotta put your stop loss. You have to account for more pips. I mean, this is 130, 40 pip day, and it's not even like that big of a move compared to, I mean, Friday week. My mouse, I gotta get a new mouse. Very annoying. Changed my batteries and everything, and it's still. You kidding me? I don't know why my mouse is all of a sudden lagging. Okay. Friday we had like probably close to 400 pips. Even on a regular day here. It's still 200 pips, so. Well, news just hit. It's a pretty decent call on gold. And I mean, we are seeing, as of right now, the dollar falling lower. Yeah, and I don't see anything in here that would cause this to want to bounce. We should go for these lows. I don't see, I mean, even 111.83. Move that. 111.86. So I guess there's a couple pips in here that would want to fill in, but because we're so low, oh, look at that, we gapped lower on the news. Because we're right near these lows, I would want to see it, at least run these lows for today. Let's see what the beast is up to. See, and it's tough when the dollar's on a bullish overall trend, and you really want to look for buys in it, but sometimes when you look at price action, it just says, hey, look, I'm bearish right now. So we've got just over 35 pips for the low. So if the dollar moves 35 pips lower, the pound can definitely, especially with how volatile it's been, it could definitely move 100 pips for this high. Even though normally, if the dollar moves 35 pips, you'd expect foreign currency to about double that. So you look for about 70-ish. Euro is having a nice bounce from the low today. So from the low so far, it's up 65 pips. Let's see, what's the euro moved? I mean the pound. Pound's only up 43, so that means that the beast should be going higher. Yeah. Well, we were pretty much, I know, again, I'm not sitting here saying, oh, I was right on the dollar. I said I wanted to go lower. It was kind of like 50-50, and it's only moved lower at the start of the news. It could easily reverse, but, if it's going to go one way, I mean, look at these gaps in here. That's kind of, so that's gap on news. That's, I don't want to say normal, but, expected in a way. But this gap here, that's let's see what time that's at. Didn't even happen on an hourly. Very interesting. So 9:30, 9:15, 9, 8:45, 7:30. Is that right? Now ICT did tweet out, because we're so late in the year, we got December coming up. He's got no bias pretty much for the rest of the year, which pretty reasonable, to be honest. I mean, the year that we've had, it's been a crazy year. So we could just stay in a consolidation for the rest of the year, or we could have 400 pip days. That's why I'm not rushing to get into a trade. So I'm gonna leave it off there. Again, expecting these lows to get taken. I would rather price not come up, fill the gap in. I'd rather just shoot here lower, and then from there it can retrace back if it wants. But because we're so close to these lows, I want to see it almost just shoot down for them. Let's see. Look at that. 80 pips in less than, what is that, 20 minutes? 10 minutes, 80 pips. I'll give this another couple minutes maybe. Because here's something else I look for. When a candle takes out the low of its current low, I want to see it expand. I don't want to see it just go below and then retrace back up as almost like a turtle soup, but in its own candle. So like here, that's when I want to see it expand, 3, 4, 5, 6, 7 pips. And then it can like retrace a little bit, and then it just keep expanding. I don't want to see no candles like this, right when it takes out the low. Because it shows me that the algorithm is continuously pushing for, in this case, lows. And it's almost, see, repricing is a strong word, because sometimes repricing really means hundreds of pips in a short time, because there's really no trading, right? Like here, it's not that sellers are causing the market to go lower. That's not what's happening. The market's going lower because the algorithm is offering liquidity at certain levels, right? So it's pretty obvious that there's going to be orders below here. So the algorithm's going to target that. It's going to target obvious areas in the market. And see, like, we're getting a little retracement here. Still 3 minutes on the 5-minute candle. Even this is a 15-minute, but inside of these 5-minute we want this candle to close down here to be optimal in a sell for the dollar. So I'll give another 2 minutes, and then I'll close this video down. Now, regardless of what it does from here, the fact that on news it went lower, kind of cool. Because if that's the case, if you bought in here at the fair value gap, you're up 36 pips right there. If you bought in this fair value gap, you're up 55 pips. Again, I am not in the trade. I'm not saying, look at me, made money in this trade. But when you look at the market and you can call where it's going, you can take pips out of the market. All right, we came down here again. Now, come on, let's see you expand lower. Stop messing around. And the reason why I don't like to see it like hang around is retail traders will see this gap and they'll just sell it, right? Or they'll wait. They'll like, okay, well, let's see, is it really gonna go lower? If you move quick and go lower, you don't give those people a chance to get in. So that's why I'd rather see it go quick, take out this low, and then when it takes out these lows, then people chase, right? Breakout traders. So when it breaks out here and they go, okay, now the dollar's really going lower, I want to buy foreign currency now. But at that point, it's already too high up. And then you can get a retracement in. They get scared to stay in the trade. They don't know what to do. But if you're in down here, you don't mind a retracement, a little bit. Hopefully, you take some profit or whatever, but would you rather a retracement up here when you're in down here or a retracement right now? Of course you don't want a retracement right now. You're too close to your entry. All right, well, I don't want this video to be too long. I want people to actually watch it. So 111.75. We should go for these lows relatively quick. I mean, it's only about another 10 pips for the dollar. I guess, I mean, if this goes lower and it stays below these, I guess it's a right call too. But the euro's moving pretty nice. Oh, all right, there we go. I'd be very surprised if this candle doesn't take out these lows. I am going to consider that a correct call, even though I made it, obvious in the beginning that we're at 50%. I don't have a strong bias, but I did say it was probably going to go lower. But I'm going to end it there. Hopefully you enjoyed this live commentary. Hopefully you enjoyed my face again. And if you took trades today, hopefully you stole some pips out of the market. If you took a loss, hopefully you didn't get smoked. Hopefully this week goes well. Hopefully I can go hunting in a couple days. Good luck. Be safe. Catch you tomorrow.